Hello, ladies and gentlemen. Sanford Khan here, business author and speaker. The title of this YouTube presentation is How to Boost or Raise the Yield on U.S. Treasury Securities. What I'm going to do is use closing prices, actual prices, as of May 31st, 2023, neglecting commissions. And it's going to involve selling call options on Treasury securities. And what I'm going to be using for Treasury securities, and I'm going to get into the risk and all that involved. With Treasury securities, with the debate in Washington about raising the debt level, people get worried about default, but the real risk of Treasury securities is interest rate risk. Interest rates go up, the value of Treasury securities go down, interest rates go down, the value of Treasury securities goes up. And what I'm going to be using for a demonstration is the TLT, Treasury Long-Term ETF. It's iShares 20-year plus Treasury Bond ETF. That's it. You could look it up on your site, your stockbroker's site, or any site you want. It has a management fee of 0.15 of 1%, which is pretty small. It also, let me get my notes here. It also pays a current dividend yield of 2.85%. By the way, the dividend is not paid quarterly like it is with a lot of other ETFs or stocks. The dividend is paid monthly, which is nice. You get a certain amount every month, but annually it comes out to 2.85%. So what we're going to be doing is selling call options on it. This is a demonstration only, and I'm going to get into the risk after I go through the demonstration. Remember, a call option, one call option is equal to 100 shares by definition. I'm kind of smiling because college professor when I was going to University of Florida studying engineering always would say, by definition, it is equal to this. Okay, by definition, one call option is equal to 100 shares. What a call option is, when you sell, where you're going to be selling, this demonstration is going to be where we sell a call option. And that gives the right to somebody, an investor who buys it, the right to buy 100 shares, one call option, 100 shares of the TLT, Treasury Long Term, at a certain price within a certain time limit. It's not an obligation. They have the right. And for that, they will pay you a premium of money right into your brokerage account. And you keep that money. Whether they exercise the call option or not, that's yours to keep. You could use it for whatever you want. You could take it out and go to a good restaurant. You could go to the Polo Lounge at the Beverly Hills Hotel. Nice place. That's if you're in Beverly Hills. Anyways, I'm being a little bit facetious. I like going there once in a while myself. They have a great coffee shop down below. Anyways, let's get into it. I have a feeling, I digress a little, but I guess I'm a digressor. So what we're going to be doing in this demonstration, and there's a lot of different ways you could go about it. This is just to give you an idea of how to boost the yield on U.S. Treasury securities using the TLT. I know this isn't fancy. It's not prime artwork, but it gets the message across, and that's the only thing. And speaking of message across, if you get something out of this video, some information that sort of piques your interest, appreciate it if you could hit the like symbol. That's the one with the thumb going up, and subscribe to my channel. I would appreciate that very much. A little plug there for me. Anyways, let's get into the meat of the presentation. Let me get my notes here. So what we're going to be doing, I picked this. We're going to sell somebody the right to buy 100 shares of TLT. You own 100 shares. You buy 100 shares of TLT at the close of trading on May 31st, Wednesday, May 31st, 2023. It closed at $103 a share. So 100 shares would be 10,300, and you own 100 shares of it. You could own 200 shares, but we're keeping it simple, 100 shares. And you're going to sell somebody the right to buy your 100 shares from you between now and September 29th for $105. It'll go up, 2 points, let's say. For that right of selling somebody the call, the right to buy 100 shares from you between May 31st and September 29th, that's 105 days from now, from May 31st. Excuse me, it's 120 days from May 31st. For that right for someone to buy 100 shares of TLT from you for $105, they will pay $340 into your account, your stockbroker's account, or whatever account you have. This is neglecting commissions, by the way. Commissions where I do it, and by the way, I also do this in my own account. So I give you full disclosure. I also do this. With the brokerage firm I have, for every call option, it's 65 cents. So the commissions are nil, and to buy 100 shares of TLT, there is no commission. So I'm neglecting commissions because they're nil to none. So anyways, where was I? For that right for someone to buy 100 shares of TLT from you between May 31st and September 29th, 120 days, they will pay you $340 in your account. That's yours to keep no matter what. You understand that? That's your money. Do whatever you want with it. So what we're going to do, what I have done for you in my own crude way, is calculated the annualized rate of return. Just based on these prices, what is the rate of return? And that's using a full, rates of return I calculated on a full year. I'm using a banker's year. A banker's year is 360 days, not 365. So let's go through the math. I wish I had a blackboard, but it wouldn't fit on the screen. So, but the rate of return. So you're having the denominator, that's the bottom number, is 10,300. That's 100 shares of TLT, which you bought at $103 a share. That's $10,300. And you got $340 for 120 days. And then annualize, well, you got to divide 120 into 360, which is obviously 3. And then you got the 2.85% dividend yield, annual dividend yield. Now that could be higher because the dividend changes month to month. But as of this date, May 31st, 2023, it's 2.85%. So let's go through the math. So 3 times 340 is $1,020 divided by 10,300 plus 2.85%. I'm looking at the chart, so if I'm looking down, it's not because I'm being rude. I'm just looking at the chart. So that's 1020 divided by 10,300 is 9.90% plus 2.85, which is equal to 12.75%. Based on these numbers, this is a static calculation, 12.75%. Now, I'll leave it up. Do you understand what I'm saying here with these numbers? It's simple math. It's just division and addition. Elementary school math, if you can remember it. Okay? 12.75%. Nothing stays the same. Nothing stays the same. Between now, May 31st, and September 29th, TLT, let me do it differently. There's only 3 ways a stock, exchange traded fund or stock could go. It could go up, it could go sideways. Sideways means in a narrow band, or down. I don't know any other way. Maybe you know some other way. I don't. So if it goes up and goes to 105 or more between May 31st and comes September, 29, it's going to be called away from you because somebody has the right to call it away. They're going to call it away if it goes to 100. Goes to 105, 10,500. They're going to call away at $105 a share. But you made your money. Actually, you made more than a 12.5% because you have an additional $200 appreciation from 103 to 105. Excuse me. Okay, so you actually made more. So you let it get called away. Maybe you could repeat this again with different prices. But anyways, in this example, you made more than 12.75%. If it goes sideways within a very narrow band, probably unlikely, but if it does, the option, the $105 option that somebody bought will expire worthless because why would they want to buy it from you, call it away from you at $105 a share when they could go into the market and buy it for less? So it'll expire worthless, which means you can now repeat the process and sell another call at $105 a share or whatever price you want to sell it at. You don't have to, I just picked 105. You could pick any price. You could go into the option tables for TLT. One reason why I picked TLT because it has tremendous liquidity, both in volume and trading as an ETF, and also in the option market. It has a lot of volume. The spread between the bid and ask is very narrow, which tells there's a lot of volume. So you can pick any price you want. I'm just using these as an example. But if it goes down, and why would it go down? If long-term interest rates go up, the value of the bond, any bond, Treasury bonds too, goes down. And you could actually, if it plummets more than $3.40 per share, you'll actually be taking a loss. All investments involve risk. Now I do it because I feel the direction of interest rates in the next year or so is going to be down, not up. But I could be wrong. I could be wrong. No guarantees. So that's the risk you take. You understand that? That's the risk you take. I do this in my account, full disclosure. This is just something that you could do. And the best way to learn it, my friends, the best way to learn this is just to jump in. I gave you an example just as something to start. You could go in and pick your prices and pick your time limit. And just learn it. Just get the knowledge. This is just an example. Anyways, I think I've spoken long enough. I made my point. The rest is up to you. Well, actually, something appreciate you could do for me, like I said in the beginning. If you got something of value from this presentation, appreciate if you could hit the like symbol, thumbs up, and subscribe to my channel. Anyways, I'll see you again, and I wish you well, and stay liquid. Take care, my friends.